Hello there. Hello there. A while back I made a video about money, how it works, where it comes from, and why we use it. And a lot of you asked me to make a follow-up video on taxes. So here we go. What are taxes? What are they for? Who pays them? And how much do we owe? Alright, first up, what are taxes? Well, taxes are essentially a type of fee. They're an amount of money that you pay to a governing authority, usually a government, typically on an income or asset or a transaction of some sort. The way to think about taxes is that you pay them whenever you interact with the government. If you buy something, the store pays sales tax to the state. If you own property, you pay property tax to your local municipality. If you earn a salary, you pay income tax to the federal government. Taxes fund the government and enable them to operate and provide services. The theory goes that in exchange for these services, people willingly give up a little bit of their money. Now, the idea is that taxes are supposed to be fair and equitable. Everyone pays their fair share and no one is overburdened. However, throughout history, this hasn't always been the case, and we often see taxes being used as a tool for governments to raise revenue in unfair or imbalanced ways. Okay, so now that we know what taxes are, what are they supposed to do? Well, the main purpose of taxes is to generate revenue that can be used by the government to fund its operations and provide public goods and services. These can include things like building roads, providing national defense, running public schools, funding parks and recreation, issuing driver's licenses and passports, running public transportation, issuing public safety, conducting scientific research, administering public health programs, and administering social safety net programs like unemployment insurance or welfare. Now, the government could also use taxes to influence behavior. For example, the government might reduce taxes on solar panels to encourage more people to install them, or the government might increase taxes on cigarettes to discourage smoking. Now, there are all kinds of arguments about how well these work, but that's a whole other video. So now that we know what taxes are for, who collects them? Well, tax collection can be done by various government agencies depending on the type of tax. For example, the Internal Revenue Service, or IRS, is responsible for collecting income tax and other federal taxes in the United States. Meanwhile, state and local governments have their own agencies that handle tax collection for things like sales tax, property tax, and so on. Additionally, there are private entities that help with tax collection on behalf of the government. Accountants and tax preparers can help individuals and businesses file their tax returns and ensure that the appropriate taxes are paid. In some countries, tax collection is handled by a central agency at the national level, while in others, it's divided between federal, state, and local governments. The specific agencies responsible for tax collection vary depending on the country and the type of tax, but ultimately, the government is responsible for ensuring that all taxes are paid. Alright, moving on. What are the different types of taxes? There are many different types of taxes, each with its own purpose and how it's calculated. Here are some of the most common ones. First, we have income tax, which is a tax on your earnings, both from employment and investments. It's typically calculated as a percentage of your total earnings, and is often progressive, meaning that higher earners pay a higher rate. Next, we have sales tax, which is a tax on purchases of goods and services. It's typically calculated as a percentage of the purchase price and is collected by the seller when you buy something. Sales tax revenue goes to the state and local governments. Property tax is a tax on the value of a property you own, typically real estate like a house or land. This is usually calculated as a percentage of the property's assessed value and is collected by the local government. Then we have capital gains tax, which is a tax on the profit you make from selling an asset like stocks, bonds, or real estate. It's typically calculated as a percentage of the profit and can vary depending on factors such as how long you've owned the asset and how much profit you've owned. We also have estate tax or inheritance tax, which is a tax on the transfer of property after someone dies. It's typically calculated as a percentage of the value of the estate and is paid by the person receiving the property. Finally, we have excise tax, which is a tax on specific goods and services such as gasoline, alcohol, and tobacco. It's typically calculated as a specific amount per unit of the good or service and is intended to discourage consumption of those items. Okay, so now that we know the different types of taxes, what happens if you don't pay them? Well, failing to pay taxes can have serious consequences. If you don't pay your income tax, the government may take legal action to collect the debt, which could result in wage garnishment, bank account levies, or even jail time. Additionally, failing to pay sales or property taxes can lead to penalties and interest charges. In extreme cases, the government may even seize and sell your assets to satisfy your tax debt. Most countries have laws requiring individuals and businesses to pay taxes, and failure to comply can result in significant fines and other penalties. And now for some of you, you might be wondering, how do these tax rates compare around the world? Well, tax rates vary widely around the world and are influenced by a number of factors including the country's economic system, political ideology, and level of government revenue. Some countries have no income tax at all, while others have very high rates. For example, in the United States, the federal income tax rate can range from 12% to 37% depending on your income, while in Finland, the top marginal income tax rate is 30%. In Sweden, it's 57%, and in Japan, it's 56.8%. As far as sales tax goes, the rate varies depending on the country. For example, in the US, sales tax can vary from 0% to 6% depending on the state. In Canada, it's 5% to 15%. In Australia, it's 10%. In Germany, it's 19%. And in France, it's 20%. Now keep in mind these are just a few examples and the tax rates can change over time. Okay, well that was a lot. Let's take a minute to recap. Taxes are fees we pay to a governing authority, usually a government. They're calculated on various types of transactions or assets. The money raised is then used by the government to fund its operations and provide public services. Different types of taxes serve different purposes, such as funding public services, encouraging certain behaviors, and generating revenue. Failing to pay taxes can result in penalties and other serious consequences. And tax rates vary around the world depending on a variety of factors. If you found this video helpful, please hit the like button. If you want to learn more about personal finance, check out my other videos on saving, investing, and budgeting. And remember, financial literacy is key to making smart decisions and achieving your financial goals. Thanks for watching, and until next time, happy learning.